What are you worrying about today? If you're an investor, you've had plenty of choices recently. Congressional stalemate, troubles in the Eurozone, the economy, housing, the national debt, Obamacare. The list seems to go on and on. While it may seem like we live in especially worrying times, the fact is we are always going to worry. It's simply human nature. Our brains are wired to worry about things we think might harm us. It's a survival mechanism that protects us from danger. It's our ancient caveman brain, the part of the brain that tells us to jump out of the way of a speeding car, or avoid a hot stove, or panic about Greek debt. This part of our brain, known as the amygdala, stores memories of past trauma, including investment trauma, such as losing money in the stock market. And if we're not careful, our caveman brain can take over and cause us to make irrational decisions that can harm our portfolios. This is what I call the cost of fear. For example, imagine it's October 2008 and you have $100,000 invested in the market. The market is falling, pundits and prognosticators are predicting economic doomsday, even the end of capitalism. Do you give in to fear and sell your stocks and sit in cash like many investors did? Or even stock up on gold, guns, and dehydrated food? Or do you keep your caveman brain in check and stay invested? If we fast forward to today, your decision to sell and move to cash would have cost you over $60,000. That's the difference between $100,000 invested in cash and $100,000 invested in the market from November 2008 to November 2012. That's the cost of fear. Even though decades of history tell us markets correct an average of 24 months after decline, investors still give in to their fear and liquidate their stock portfolios, usually after the market has significantly declined. Ignoring your caveman brain isn't easy, especially when other investors are panicking. To avoid making fear-based investment decisions, make sure you have an investment plan in writing. Also work with an experienced financial advisor who can help you navigate the market's ups and downs and stay invested. Finally, turn down the noise. It's great to stay informed, but losing sight of the big picture because of media pundits can hamper your ability to reach your long-term goals. So evolve a more rational investment perspective and put your caveman brain back in the cave. Your portfolio will thank you.